While most investors are still chasing crowded, overvalued AI software names, a roughly $200 million US tech company called Lantronix is quietly positioning itself in a very different part of the AI stack. Edge hardware used in defense drones, industrial systems, and secure government networks, trading around $5.82. This is not a headline stock, and that's exactly why it's being overlooked. With new Army-compliant deployments, real-world edge AI products, and a major technology cycle approaching, this is an evidence-first breakdown of why LTRX is back on the radar without hype and without promises. At the time of recording, Lantronix is trading around $5.82. What you're about to hear is a calm, research-driven look at why this small US technology company is drawing quiet attention from investors who focus on signals rather than noise. Lantronix isn't a moonshot story. It's an edge computing company building infrastructure that matters for drones, defense, and real-world AI at the network edge, the kind of under-the-radar positioning that can slowly re-rate a small cap when execution starts to show up in contracts and deployments. Lantronix specializes in secure compute and connectivity hardware designed for environments where latency, power efficiency, and reliability matter more than marketing buzz. These systems sit close to sensors on drones, cameras, and industrial equipment, allowing AI models to process data locally instead of relying on distant cloud servers. That distinction is critical for defense, smart city infrastructure, and industrial automation, where milliseconds and uptime can't be compromised. Over the past year, Lantronix has transitioned from experimental demos into commercial-grade deployments. The company now offers NDAA and compliant solutions, which is a non-negotiable requirement for US government and defense-related customers. This compliance alone creates a significant moat, because it excludes many overseas competitors from participating in these contracts. Lantronix has also announced integrations with established imaging, gimbal, and unmanned system platforms, not theoretical partnerships, but hardware and software designed to work together in operational environments. From a strategic perspective, this places Lantronix in a narrow but valuable niche. Instead of competing head-to-head with massive AI chipmakers, it focuses on edge systems that enable AI to function reliably in constrained environments. For unmanned aerial systems, that means longer flight times, lower power draw, and faster onboard decision-making. For industrial customers, it means reduced bandwidth costs and more resilient operations. When compared with competitors like Digi International or Advantech, Lantronix operates at a much smaller scale. But that also explains the valuation gap and why even modest execution improvements can have an outsized impact on perception. Financially, Lantronix remains a small-cap company still working toward consistent profitability. Recent quarterly results showed revenue in the high tens of millions, with guidance that reflects a business in transition rather than rapid expansion. There have been periods of revenue pressure and earnings misses. And it's important to acknowledge that openly, this is not a flawless growth story, and short-term volatility should be expected. However, the quality of revenue matters just as much as the quantity. Newer product lines, higher value system integrations, and long-cycle customers tend to improve margins over time. Management has emphasized disciplined cost control while continuing to invest in product development, which suggests a long-term focus on sustainability rather than chasing short-term optics. The real question for investors isn't whether Lantronix will suddenly become a billion-dollar company overnight. The question is whether it can steadily convert technical credibility into repeatable contracts. Defense, infrastructure, and industrial customers don't move quickly, but when they commit, relationships often last for years. Key catalysts to watch include additional confirmations of defense-related deployments, expanded partner integrations, and commentary around backlog and order visibility in upcoming earnings calls. Participation in major technology and defense trade shows also matters more than it might appear on the surface. These events are where procurement conversations begin, not where hype peaks. If you value calm, research-driven breakdowns like this, focused on real signals instead of hype, consider subscribing. It helps us keep bringing you overlooked US stock opportunities with real-world relevance. From a risk management perspective, this is not a stock to approach emotionally. Position sizing is critical. Small-cap names like this can move sharply on earnings, news, or even low-volume trading days. A disciplined approach, small initial exposure, confirmation-based additions, and clearly defined risk tolerance is essential. Investors should also pay attention to how management discusses margins, supply chain stability, and customer concentration. Progress in these areas often shows up quietly before the market reacts. Analyst coverage exists, but it's limited, which means perception can shift quickly once new information becomes widely noticed. At the time of recording, the stock is trading around $5.82. These price levels reflect where Lantronix was trading when this script was prepared, and prices can change rapidly, especially with small-cap stocks, so always check real-time data before making any decisions. Looking ahead, Lantronix's value proposition rests on execution, not speculation. Secure edge computing, government-compliant hardware, and AI deployment at the edge are not passing trends. They are structural needs, and companies that serve them reliably tend to benefit over time. The path may be uneven, but the direction is clear. This is not investment advice. It's a framework for understanding why a small, often ignored U.S. technology company is quietly positioning itself in markets where credibility and compliance matter more than hype. If future updates confirm progress on contracts, margins, and repeat deployments, the market may eventually reprice that reality. These price levels reflect where the stock was trading when this was recorded, so always verify current prices and information before acting. As always, focus on evidence, manage risk carefully, and let execution, not excitement, guide your decisions.